Welcome to Relearn Corporate Financing Session number 3. Topics to be covered: factors affecting rate of interest, roles of banks to control inflation and economic development, determining and measuring the rate of interest, factors affecting the demand for loanable funds, measuring interest rate sensitivity, income structure and profit quality, benchmark prime lending rate or BPLR, determination of BPLR, general issues on interest rate, factors affecting the rate of interest. First is credit and payment history. Making timely mortgage or rent payments is very important. Paying late just once by 30 days or more can affect both the loan and the interest rate offered you. Late payments on credit cards, car payments and other bills can also affect your interest rate and loan amount. Second is debt to income ratio. Your monthly debt obligations and income get converted to a debt to income ratio when you apply for a loan. Lenders often have a maximum ratio percentage that they will allow a borrower to have. Often, the higher the ratio, the higher the rate offered. Third is loan amount versus property value. Lenders often refer to this comparison as your loan to value because more equity or money down decreases the risk involved with lending. A lower LTV may result in lower rate. Property type. One of the first questions a lender asks involves the type of property you are buying or refinancing. Common types include single-family homes, manufactured homes, or multi-family homes. While loans may be available for many different property types, your interest rate might be lower for a single-family home than for a multi-family home. It all boils down to the risk involved with writing loans on a particular property type. The less risky and the better rate. Occupancy. Another question lender frequently asks concerns occupancy type. Whether your loan is for the home you live in full-time, part-time or rent to others affects the interest rate you are offered. Generally, owner-occupants who live in their homes full-time enjoy the best rates, followed by vacation home owners and property investors. Next is loan amount. Sometimes the amount of money you borrow makes a difference in your interest rate. Just as buying a bulk might reduce the price paid per unit, borrowing larger sums of money might reduce in discounted interest rates. The next is reduced paperwork. Many lenders offer reduced paperwork options. While this option may increase the convenience of getting a loan for the consumer, it may also increase the risk for the lender. To balance risk with convenience, reduced paperwork often involves a slightly higher rate. The next is property state. Different states have different regulations and requirements that result in varying business costs. For lenders, their costs are frequently passed to the consumer in the form of an interest rate. Varying cost means varying interest rate across the nation. Next is points. Borrowers can often receive a lower rate by paying extra points. While the discounts to the interest rate may vary, each point paid typically equals 1 percentage point of the total amount of the loan. While this option increases the upfront cost for a mortgage, it lowers the interest rate. The next is market forces. The RBI has the power to raise and lower interest rates. This ultimately affects the interest rates charged to consumers. For adjustable rate mortgage loans, interest rates are tied to an index. Variations in an index might affect the interest rate of a particular loan both for the initial rate offered and for the interest rate paid over the time. Role of banks to control inflation and economic development. To delay in transaction delays and frustrations, teller system introduced in major banks. Computerization of banking services should also be done in the interest of efficiency and promptness. Transaction delays and frustration को हटाने के लिए टेलर सिस्टम बहुत सारे बैंक्स में इंट्रोड्यूस किए गए हैं. कंप्यूटराइजेशन बैंकिंग सर्विसेज में बहुत हेल्पफुल है to increase efficiency and promptness. Banks should mobilize maximum possible deposits to mobilize deposits schemes such as attractive reinvestment, recurring deposits plan, permanent run, etc. should be promoted. The small depositors should be given education in banking. They has to be assured that their money withdrawal is not difficult and there are number of benefits. Small depositors को education देना बैंकिंग के बारे में बहुत ज़रूरी है. उनको ये भरोसा दिलाया जाना चाहिए कि उनका मनी डिपॉजिट या मनी विड्रॉल अब डिफिकल्ट नहीं रहा है और उसके बहुत सारे फायदे होते हैं. Banking service should be extended to rural area also. Banking services rural area में भी होनी चाहिए, extend होनी चाहिए, सिर्फ urban areas में ही नहीं. The establishment of rural development bank is the step in the right direction. Rural area में extend करने के लिए बहुत सारे right direction में steps उठाए गए हैं, जिसमें से establishment of rural development bank भी है. Deposits should be mobilized and loans should be advanced on liberal basis. Determining and measuring the interest rates. The interest rates are depend on the demand and supply of money in the market. Interest rate depend करता है कि कितनी demand and supply है market के अंदर. The amount of money available in a market is determined by the central bank. कितना money होना चाहिए market के अंदर वो डिटरमाइन करता है सेंट्रल बैंक. और इंडिया में सेंट्रल बैंक है RBI, दैट इज रिजर्व बैंक ऑफ इंडिया. RBI control the total amount of money in circulation by the sale and purchase of government treasury bonds are called the open market operation. RBI कंट्रोल करता है मनी सर्कुलेशन को by sale and purchase government treasury bonds, जिसको हम बोलते हैं open market operations. If interest rate rises, households and businesses will likely allocate more of their assets holdings into interest-bearing accounts and will hold less in the form of money. अगर interest rate बढ़ जाता है तो businesses and households ये सारे अपने assets को allocate कर देंगे दूसरे interest-bearing accounts में और अपने पास पैसा कम रखेंगे. Since interest-bearing deposits are primarily source of funds used to lend in the financial sector, change in total money demand affects supply of loanable funds and in turn affects the interest rates on loans. The equilibrium interest rate in the economy is that rate which equalizes money supply and money demand. Equilibrium interest rate economy के अंदर वो होता है जहाँ पे money supply and money demand same हो. That is where the money supply is equal to the money demand. उस rate पे equilibrium interest rate कहना जाता है. Factors affecting the demand for loanable funds. Price. Higher interest rate decreases the quality of loans demanded as the cost of investment projects rise with interest rates. Capital productivity. If capital tools are more productive, firms are willing to pay more for loanable funds. Changes in capital productivity shift the demand curve. Consumption smoothing. Just as loan supply is affected by the desire to smooth the consumption across income variations, so is demand. Often, individuals borrow more when income is temporarily low. Measuring interest rate sensitivity. Interest rate sensitivity means measuring of how much the price of fixed income asset will fluctuate as a result of changes in the interest rate environment. Securities that are more sensitive will have greater price fluctuations than those with less sensitivity. वो सिक्योरिटी जो बहुत सेंसिटिव है उनमें ज़्यादा चेंजेस आएंगे एज कम्पेयर टू दोज सिक्योरिटीज जो कम सेंसिटिव हैं. Interest rate sensitivity of a company's balance sheet can be estimated using the ratio of the 1-year repricing gap to assets. Banks with positive ratios are expected to perform well in a rising rate environment since they can replace assets with higher yielding assets faster than they will have to replace low-cost deposits with costlier funds. Income structure and profit quality. Banks are now diversified in non-traditional market. A large part of the bank's profit is coming from non-fund based services and from trading based activities in fixed income securities, equity and foreign exchange. The change in the profit structure of banks is effect of improving the profitability without increasing the traditional risk. The shift from traditional social banking to profit banking, implementation of prudential norms and pertaining to capital adequacy, income recognition, asset classification and provisioning exposure norms etc. have given rise to increased competition. Performance in terms of profitability has come to be important for banks. The analysis of banks is based on external and internal variables. External variables include rate of economic growth, industry-wide developments, inflation, money supply, etc. And internal variables include nature of ownership, size, quality of assets, interest rate, business diversification and productivity. Benchmark prime lending rate, that is BPLR. The benchmark prime lending rate is usually applied to commercial lending. It means that the prime interest rate is the starting point or benchmark for interest rates charged to borrowers for many loan products depending upon the borrower's creditworthiness. The benchmark interest rate is also used by investors and is often confused with the benchmark prime lending rate. This is the minimum interest rate investors will accept for non-treasury investments. Determination of BPLR. Banks are free to determine the rate of interest without reference to their BPLR and regardless of the size in respect of the following loans. First is loans for purchase of consumer durables. Second, loans to individuals against shares and debentures or bonds. Third, other non-priority sector personal loans including credit card dues. Fourth, advances or overdrafts against domestic or NRE deposits with the bank, provided that the deposits stand either in the name of borrower himself or in the names of the borrowers jointly with another person. Finance guaranteed to intermediary agencies for on-lending to ultimate beneficiaries and agencies providing input support. Finance granted to housing finance intermediary agencies for on-lending to ultimate beneficiaries. Discounting of bills, loans or advance or cash credit or overdrafts against commodities subject to selective credit control. Loans covered by participation in interest refinancing schemes of term lending institutions. Banks are free to charge rates as per stipulation of the refinancing agencies without reference to BPLR. General issues on interest rates. General guidelines from RBI are as follows. The banks should charge interest on loans, advances or cash credits or overdrafts or any other financial accommodation granted or provided or renewed by them, or discount nuisance bills in accordance with the directives on interest rates on advances issued by RBI from time to time. The interest at the specified rates shall be charged at monthly interest. The interest to be charged shall be rounded off to the nearest rupee. Banks have freedom to offer all categories of loans on fixed or floating rates, subject to conformity to Asset Liability Management (ALM) guidelines. Banks may price floating rate products by using market benchmarks in a transparent manner. Banks need not charge a uniform rate of interest, even under a consortium arrangement. Each member bank should charge rate of interest on the portion of the credit limits extended by it to the borrower subject to its BPLR. Do it yourself. Are the following true or false? The interest rate is affected by money supply. Banks with positive ratios are expected to perform well in rising rate environment. Thank you.